Hi, my name is Jay Goodis, and I am the co-founder and CEO of Tax Templates Inc. Bill C-208 has a huge impact on intergenerational transfers of property, creating the opportunity for the transfers to claim the capital gains exemption. I'm going to walk you through how to quantify the after-tax cash when a capital gains exemption applies. For this scenario, we'll be using TTI's Personal Tax Scenario Worksheet. To access the more complex features we'll need for these transactions, the worksheet must be in the Standard or Advanced View mode, which can be done by clicking either button at the top of the worksheet. On the T1 Base tab, we've already entered the name, province, date of birth, and baseline income of the taxpayer before any transfers of property. Let's assume the transfer is making a qualified disposition of OPCO for $1 million. We'll enter the transfer of property amounts in the appropriate section. To enter the capital gain eligible for the CGE deduction, I recommend using the links in the total income or net income section. I'll click the net qualified capital gains link, which will take me directly to the CGE section. We'll begin by changing the description of the asset to shares of OPCO. Next, we'll specify the year of disposition. The worksheet will default to the tax year, but we provide flexibility to support assets disposed of in previous years for capital gains reserves. We can then include the type of asset we are disposing of. For assets eligible for the capital gains exemption, you can select the type of qualified asset being disposed of from the drop-down menu. This input is critical due to the different amount of capital gains exemptions for farming and fishing property and related provincial tax calculations. We can then include the transaction details. Separation of the proceeds and the ACB is important if using the capital gains reserve calculation. Immediately below is the capital gains exemption section where we show the 3 capital gains exemption limits. The minimum of these 3 applicable limits can be claimed as a capital gains deduction in the taxation year. These amounts are calculated automatically but are overridable for unique circumstances. If a capital gains exemption has been previously claimed, enter the amount and this will be factored into the appropriate limits. If the disposition qualifies for a capital gains reserve, we'll enter the proceeds collected in the tax year. The worksheet will then calculate the current year capital gain and reserve for the following year. If you are completing a multi-year plan for a taxpayer, you'll see that the opening reserves and prior proceeds populate automatically in the next scenario. Once the scenario is complete, we can click the Optimize button where TTI's proprietary algorithm will maximize the after-tax cash for the taxpayer and claim the appropriate deduction. Any unique amounts, such as alternative minimum tax, will be factored into the final calculations. We can see the net cash that will be received by the taxpayer, net of taxes and related amounts. We can easily add years or do other supporting calculations in the note cells located throughout. If you have any questions about using this feature, please feel free to email us at support@taxtemplates.ca.